Right now, the market, the Dow is battling the case of 26,100, and they've been battling like that for the last 30 minutes. So far, they're holding, which would be a pretty good deal here. And then beyond that, there'd be dragons. If they break down through there, then 26,000 itself becomes a real factor. So, and we're kind of open-ended. Earlier on, we got some news on Bernie Sanders, and that he had to have 2 stents put in, and that may throw the whole election wide open. We'll have to wait and see if it's a minor condition, which we hope, or if it has some more substantial meaning, and which other candidates will benefit from it. And that, I think, will have a market impact. For now, the market's looking internally. It's more about the damage that was done yesterday technically and trying to hold on and repair here. So in the short run, I'd keep my eye on 26,100. If they break there, then it could get a little nasty. And obviously, keep your eye on the news ticker, because we got what looked like a favorable comment from Pelosi. Did not have a major market impact, but it could add to a rally if we hold here.
Are you a buyer that services will reflect a bleed from manufacturing tomorrow?
I think, but not significant. I think we'll see a little bit of a pullback in that area. But I think, again, you're seeing a general weakening in the economy. Now, the consumer's been the all-star, and I don't think he's going to get anywhere near as dismal as the manufacturing data was. We are 70% consumer, so we'll see where we go from there. But I think you want to watch the market and its own internals. And again, I don't think they've fully gotten into politics and where things may go. I mean, it's very early. The election's not for another year.
Although less than 30 days from supposed Brexit, right?
Right.
I see a few banks have upped their call for a no-deal Brexit.
And that's coming at about the same time that we're waiting to see what the Fed is going to do. And they have this other problem with the repos that is not fully resolved. It turned out not to be a major crisis, but I think it's, to some degree, background to impact their policy, because it's like doing QE all over again. So we'll wait and see. I'm assuming they will do 2 more cuts because the economic data is weak enough.
How closely are you watching the bond market? I mean, we saw it yesterday, big move, a big drop in Treasury yields yesterday that coincided with the drop in equities here. Similar thing playing out, maybe not quite as volatile in that market today, but a similar thing playing out. Is this a correlation that continues?
Well, actually, it was non-correlated before the number came out, because what had happened was Japan had an absolutely dreadful bond auction. And there were rumors that they were beginning to realize that, hey, negative rates really don't work. They've basically destroyed their own banking system, and they've got to get things back up. So before the number came out at 10 o'clock, yields were actually going up all around the world. But when we came in with such a weak number, that turned everything around. So, yeah, I'm watching bonds to see if those correlations begin to build.